Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings, and today we've got a real treat, a deal that might just shake things up in the tech world. We're diving into a report from DT Cloudstar Acquisition Corporation, or DTCS as they call themselves, and it looks like they're gearing up for a significant business combination. Think of it as a merger where two companies decide to join forces. The big news here is the announcement of a business combination agreement with PrimeGen US Incorporated, or PrimeGen. This is the crucial step that sets the wheels in motion for this merger. Now, DTCs isn't your typical operating company. They're what is called a special purpose acquisition company, or SPAC for those new to this. SPACs are basically shells companies created with the sole purpose of raising capital through an initial public offering, or IPO, to acquire an existing private company. So, DTCs has been looking for a company like PrimeGen to merge with, and it seems they found their match. The key date here is the 4th of February 2026. That is when this report was filed to announce the signing of this business combination agreement. It is important to note that this is just the agreement itself, not the final completion of the merger. There are many steps and approvals that still need to happen. One interesting detail is that DTCs is classified as an emerging growth company. This means they get to use some relaxed regulations for a period, which can help them get off the ground faster. However, they've elected not to use an extended transition period for new financial accounting rules, showing a commitment to transparency. Let's talk about the company structure for a moment. DTCs has several types of securities. You have ordinary shares, which are the basic ownership stakes in the company. Then you have units, which usually combine shares with something else, in this case, one ordinary share and one right. And speaking of rights, these entitle holders to receive a fraction of an ordinary share. In this case, 1/9 of one ordinary share. It is a bit like a coupon that gives you a piece of the company later on. The currency involved in the trading of these securities is the US dollar, and the unit of measurement is shares. This is fairly standard for companies listed on US exchanges. And where are these shares traded? They're listed on the Nasdaq Stock Market LLC, a major global stock exchange. This means DTCs, and eventually the combined company will be under the watchful eye of regulators and public investors. So what does this business combination mean? Essentially, PrimeGen is going to become a publicly traded company through this merger. With DTCs, this gives PrimeGen access to capital markets, which can fuel its growth, fund research and development, and potentially expand its operations. This section, item 7.01, is basically the company telling everyone the same important information at the same time, which is what Regulation FD is all about. No one should get special insider information. They've issued a joint press release with PrimeGen to announce this deal. Now, like most forward-looking documents, this report is filled with what they call forward-looking statements. These are essentially educated guesses or predictions about the future. They use phrases like believe, expect, anticipate, and potential. It is crucial to understand that these are not guarantees. They represent the company's hopes and plans, but many things can go wrong. The report clearly outlines numerous risks. One of the biggest is the risk that the business combination might not happen at all or could be delayed. This uncertainty can significantly impact the stock price of DTCs. Think of it like planning a big party, but you are not 100% sure all your guests will show up or if the venue will actually be available. For this deal to go through, several conditions must be met. DTC shareholders need to approve the agreement, certain closing requirements need to be fulfilled, and importantly, they'll need nods from government and regulatory bodies. Any hiccup here could derail the entire plan. The report also acknowledges that broad economic shifts both in the US and globally can strongly influence the outcome. If the economy takes a downturn, it could affect consumer spending, business investment, and ultimately, the success of this merger and PrimeGen's future prospects. A really specific and noteworthy risk mentioned is compliance with emerging regulations, specifically calling out the Biosecure Act and its potential impact on manufacturing and supply chains. This suggests that the regulatory landscape for the combined entity could be complex and require significant attention and resources to navigate. The company is also letting investors know that more detailed information will be made available. They'll be filing a registration statement with the Securities and Exchange Commission, or SEC, which will include a proxy statement and prospectus. This is where shareholders will get the full picture and cast their votes on the deal. They are very clear that this current report is just a summary and not the official document shareholders should rely on for voting. It is like getting a movie trailer before seeing the full feature film. This part is about who might be influencing shareholders to vote one way or another. It states that DTC's and PrimeGen's directors, officers, and employees could be considered participants in the solicitation of proxy votes. This is standard disclosure to ensure transparency about who is advocating for the deal. And finally, we see the signatures, confirming that the appropriate people have reviewed and authorized this document. Sam Jung Sunday, the Chief Executive Officer of DT Cloudstar Acquisition Corporation, has signed off on this report, attesting to its contents. So, what is the takeaway from all this? Well, this filing signals a significant step forward for PrimeGen as it aims to go public. The merger with DTCs offers a pathway to capital and visibility. However, there are substantial hurdles to overcome. The multitude of risk factors, from regulatory changes like the Biosecure Act to general economic conditions, and the sheer complexity of completing a merger, paint a picture of a high-stakes endeavour. While there are no financial tables in this particular filing to analyse, the narrative is all about potential and future performance. The inclusion of specific regulatory concerns like the Biosecure Act is particularly interesting. It suggests that PrimeGen's business might be in an industry that is facing increasing scrutiny or that has specific compliance challenges. This could be a significant factor in their long-term success and profitability. The absence of financial data in this report means we can't assess PrimeGen's current financial health directly. We have to rely on the forward-looking statements and the risks outlined. In essence, this is a company on the cusp of change seeking to leverage public markets for growth. The success of this business combination will heavily depend on navigating regulatory landscapes, securing shareholder approval, and executing a sound business strategy post-merger. It is definitely a situation to keep an eye on, especially as more details emerge in the upcoming registration statement. Alright, that is our breakdown of this DT Cloudstar Acquisition Corporation filing. What is your take on this upcoming merger and the potential challenges ahead? Do you think PrimeGen will successfully navigate these hurdles? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And of course, subscribe for more deep dives into the corporate world. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next Decode.